Good afternoon, this is Rick. This is the results video for the New Zealand employment change, which came out Wednesday, February 6th at 4:45 p.m. We're going to look at two numbers here. One is the employment change and one is the unemployment rate. The unemployment rate actually was better by 0.2 percentage point and dropped from 7.1% to 6.9%. However, the employment change, which is the number that the trade plan focuses on, dropped from 0.4 to a negative 1.0%. That is a drop of 1.4%. It takes 4 percentage points to get down to 0.0, and another full percentage point to drop down to a negative 1.0. So the total miss on this was a minus 1.4% as it relates to the forecast number. The trade plan called for a deviation of a 0.3%, so we more than exceeded that. Even though there's a conflict between the employment change and the unemployment rate, again, the trade plan focuses on the employment change number, which the trigger was more than hit on this particular release. Let's take a look at the charts and see how this trade started and how it ended up. We're currently looking at the New Zealand USD chart. This is right prior to the release. Again, my time zone is 1 hour behind the Eastern Standard Time, and this is the New Zealand USD chart 1 minute. Now the trade plan called for two trades. One was the spike trade, one is a continuation trade, and both of those are based on a trigger of a 0.3, plus or minus 0.3 from the forecast to the actual. I'm going to show you this chart, and then before we move forward to see how this trade ended up, I want to take a look at something called a tick chart so that we can see exactly what happened as this release came out. Here you just see the release came out, and we see a spike that came up and then came down. Now what we were not able to see as we looked at this, and this is very important, especially on a spike trade, is did it go down, flash up, and flash back down? Because if it did, and you were setting up on a spike trade, and you had a sell based on the number at this point, and it came down and triggered your trade, which entered you into a short trade, and then it swung back up, and you had your stop set up here, you were then out of the trade at a loss, even though you were right. So again, was it a whipsaw? In other words, did it come up, or down, up, down, or did it just go up from this point and then come back down and continue on its downward path? The only way that you can see it after the fact is by looking at a tick chart, which I have access to, and you do as well. If you have an account with FXCM, we'll show you the tick chart on this that I've taken a shot of. But it's important because if you're looking at this post-trade, you can't tell whether or not you would have been in this trade and stopped out, or if it was a great trade. So let's take a look at that. I think it's pretty important. This is the tick chart, and I have a line drawn at 6:45:05, and follow my cursor across the bottom here as we see the numbers change. I mean, you note here it's 16:44:33, 40, 48. It immediately goes from 44, 48 to 45:05, meaning that in that period of time there was no change in the price. There was no tick. When I say tick chart, I mean every tick this particular chart records. So if we look at between a certain point here, we may see a period where there are 4 or 5 ticks within the second. 16:45:18, 16:45:18, 16:45:18, 16:45:19, 19, as I'm moving over, one click at a time, 19, 20. So at 16:45:19, we had 3 ticks within that 1 second. This is very obvious to us as it came out 16:44:48, and immediately at 16:45:05, that is some seconds after that, where it had sat, and then when the release came out, it jumped up, flattened out across the top, and then came down and continued to come down. So again, these are these are pretty quick. As we're looking at this, this is 16:45:05 where I've drawn the line, and here we are 2 minutes later, 16:47:00, and we note that the move within those 2 minutes was up and then back down. So as we're looking at this, it will help us determine post-trade what actually happened. Did we get filled on a down and then get stopped out, or did it come up and then came down and continue to go down? So in this case, as we look at this, it's obvious that it took off, went up first, spiked upward, flattened out at that top, and then quickly came back down in a matter of seconds. So let's go now back, take a look at the other chart, and see where this trade ends up. What I've done is I've drawn a line here at roughly, hopefully, the place you'd been filled on a spike. If not, you could have been filled at this area here. And if you were not spike trading, the continuation trade says that we're going to follow that release. So the release data is negative. We're going to go ahead and sell the New Zealand USD at this point. So if you had entered at this point on a short position as prescribed, let's move this forward on a 1 minute chart. We're going to change this to a 5 minute chart. You had immediately out of the gate a painless trade, and it continued to drop. Now this is a 1 minute chart. Let's switch this to a 5 minute chart so we can get the scope of this move. And here we are. Now it's a 5 minute chart. From this point, 84.12, 83.85, 83.73, 83.56. At this point right now you are at 50 plus pips, and that's within roughly 3 hours, 3.5 hours after the release. And let's go ahead and move this forward, and it continues to drop. So depending on how you would manage this trade, it was a lucrative trade. It was a very good trade. We'll go ahead and take this all the way out. Remember where our lines are here, 8419, 8412, and you see that they start falling further away, 60 some pips, and it continues to drop throughout. Now this is now being affected through some other issues that came up, and this is in relation to the ECB news conference, the European Union interest rate decision, the UK assets facility, and IR bank rate. It continued to drop throughout the day, but it was more in effect as the US dollar was increasing in value than the New Zealand dollar was decreasing in value. Let's take a real quick look at the US dollar on this and see how it picked up steam throughout the morning. So we're looking at the US dollar index futures cash composite. It's noted by the $DXY. There's another US dollar chart out there called $USDOLLAR. It is a comparative relation to currency pairs, as this is other currency pairs, but the calculation is done differently and is a little bit different. But this gives us a good sense of how the US dollar has reacted this morning. Not last night when the New Zealand dollar was continuing to drop, but here as the morning 6:55 Central Time, 7 o'clock Central Time, which is 8 o'clock Eastern Standard Time, we know that the US dollar took off, and it picked up quite a bit of value from the morning until where we are exactly right now, which is very close to noon Central Time, 1 p.m. Eastern Standard Time. I may think I want to take a look at one more thing here. Let's see. I may want to take a look at the Dow Jones Industrial to see how it reacted. Did it react in conjunction with the US dollar index, or did it act in an inverse relationship? Let's go take a quick look. I've switched this over to the Dow Jones Industrial Average, $DJI. Could be in yours the Dow, the DJ, 30, depending on your platform. As we note this at 8:30 as the market opened, the Dow Jones dropped off. It dropped down as low as 114, 115 plus ticks points. And since 10:30, it looks like it's trying to rebound a little bit. It is currently down from the open by around 80 some points, I believe, 90 points. So it had picked up a little bit of reversal around 10:30 as the European markets closed. And the Dow Jones is trying to rally a little bit, but to come back to where it was at the opening is a pretty tough trick today. So it's just neat to note the inverse relationship between the Dow Jones Industrial and the US dollar chart. Let's see if I can get that up real quick. Yeah, so we'll bring that up right now and we'll zoom in on that, and again we see the inverse relationship between the two. Just something really nice to know. Keep that in the back of your mind when you're trading foreign currencies, that you need to be engaged in not just what is going on with the currencies, but what is indeed going on with the US dollar, what is going on with the US equity market, and what is going on with the European equity markets, the FTSE, the DAX, and see how they relate to the currencies. Really nothing to do with the New Zealand USD trade. We've seen that it was a great trade, 50 plus, 60 plus, 70 plus, depending on how you managed it and where you got out. But this morning, as all the news hit regarding the ECB press conference and Draghi speaking, and the UK asset facility and the bank rate and a myriad of other economic indicators were released, this is what happened in the morning. I did send out an email from Huskins that said to stay away today from the trades because of the volatility involved in that. We knew that there would be a move in one direction, but you don't know which direction. The move was on the Euro USD down significantly. Let's see if I can bring that up real quick. Euro USD, and we'll get a look to see what happened to the euro this morning. It dropped well over 150, 160, 100 pips, 150, 160 pips. So quite a significant drop, almost close to 200 pips at this point. Pretty severe drop. My math is right. Somebody check me on that. 177 pips. We do the math from this point, somewhere in that range, 177, 180 pips. Significant drop. Didn't trade it. Huskins didn't trade it only because of the volatility. Had you picked up on it and got in and chased this trade this morning, it would have been a great trade for you, but I'm not one that likes to chase trades because you never know when it's going to turn on you. Thanks. Hope you have a great day. Hope this has been not only an assistance to you at looking at the New Zealand USD results, but what is going on this morning when you have a day filled with so many releases and economic indicators and press conferences that all line up one right after another. Have a great day. We'll talk to you later.